Hello everyone, let me just clear this up. Like always, I just want to check if you guys can hear me, if you can see me. So if you can hear me, see me, Moses, Naomi, Hiomia, sorry, my expression, Rian, Ronald, Guama, see a couple of you guys in attendance. If you can hear me, just please reply yes in the answers, in the questions and answers space, then so I can be sure that you can hear me. Yes, Manuel said yes, he has me. Right, nice. Let's start. Yes, Marine Surzok also says you can hear me. Right, I'm assuming you can all hear me. Right. I just want to apologize, you guys, for the previous webinar, which would have been 8 o'clock in the evening, and there was some glitch with GoWebinar, and we didn't, we couldn't proceed with that. As always, I'm Theunis Kruger. I'm the FX trainer for Forex Time, and it's really a privilege to be here with you guys. We can actually test something new today. I want to give one or two of you a chance to speak, to be more interactive. I'm always trying to get these things more interactive so you can get more value out of it. I also want to apologize for my voice. I've had a bit of a flu, recovering, so my voice is still a little bit weirdish. So, all right. The reason why I'm going to do this introduction to Japanese candlesticks again is I get a lot of guys that I do training with. I do a lot of group trainings, one-on-one trainings. That's beside the webinars we go to, the seminars we have, where we talk to the guys. And a lot of people still come to me and say, Theunis, but must I study these candlesticks? Must I know what it means? Must I really make a study of this? And it's always going to be the same answer. It can enhance your trading, yes, but you need the basics to be in place. So I'll just repeat that quickly again so you guys can know. I'm assuming most of you guys are beginners. So the agenda for today is a short introduction, the history of candlesticks, structure, how it's structured, how it works, price movements, how it's connected to price movements and why it's so useful. Time frames, what does it mean? At this point, I just want to say about when all my seminars, especially about 50% of the guys that come are beginners. So a lot of what we talk doesn't make sense to them. We talk about candlesticks, they've got no idea, or a very basic idea. So this is again going to be like a reference that I can refer people to, because we're constantly learning, updating. I did it a couple of months ago, but as you learn, as I get feedback from people, it changes a little bit. So that's why I want to do it again. Different types of candles that we get, bullish reversals, bearish reversals, why it's important. Our website, we also get a lot of information, I'll show you, and then questions and answers. As always, guys, please interrupt me. If you have questions, just post them there. Oh, Maureen says she can't see me yet. Let's just sort that out. Maureen, from my side, everything looks fine. Audio is fine. Feed looks fine. So I'm not sure why you can't see. If the worst comes to worst and you do want to see, you can't see the screen or anything, then just email me and afterwards, and I'll send you the link. Then you can watch it. You can watch it again. But it seems from my side like everything is fine. Right, nothing else, so let's proceed. Ask questions anytime. The value of asking questions is normally there's a lot of other guys that also ask the same question. They just haven't got the confidence. When you ask a question, it means that you've thought about it. So the learning value, the impact on your mental framework, the way you learn, is much higher if you ask a question and you get an answer, and when you just get the answer before you've asked the question. So please always, I tell the guys at seminars and the webinars, If you've got answers, write them down before the time and ask them so you can get answers for your questions. All right. Let's go. Introduction, always beginners. Like a tree, you can't expect fruit on a tree if it hasn't got a root system. The tree won't be able even to stand upright if it hasn't got a root system. A lot of guys start with trading, they just focus on the money, let's make a lot of money. Yes, with any business you can make money if you've done your homework, if you've done your due diligence, if you've developed your root system. It's just a nice picture to have in your brain. Our brain works very nicely with pictures. If you see pictures, what they say, pictures with 1,000 words. So get this picture in your mind. We're not into entertainment. This is a business, a micro business, a very special micro business. Fourth industrial revolution related. If you know what that means, please go and Google it. Fourth industrial revolution. Over it's very small, very scalable, amazing. But you have to get the skill. You have to develop the skill. You have to understand the language of the market, get your foundation right. All pictures is the same thing, right? What do we mean with the foundation, the root system? Basically, the foundation is you have to understand what technical analysis is. Technical analysis is not we're trying to ever trying to forecast or to predict the price. Nobody can predict the price. Your mentality when you try to predict the price will always be one of I think I know what's going to happen. We don't know what's going to happen. The market just tells us at certain stages. If you don't know what I mean, go and watch my my gift of online trading, foundation of online trading one, so I can explain to you there. I'm not going to repeat everything here. So you have to understand what is technical analysis. We look at the price charts to identify the next trend in its early stages. Very important. If you know that, if you can spot that on the chart, then and I'll show you a little bit later. So I want to make it, really interactive or really practical. If you know that, then your next step is you only need a simple, well-defined method combined with money management that you train and that you can apply. So you wait for those times when the market tells you. I call it a golden spot. When the market tells you it's right, so the odds are in your favor. It's a good place to take a risk, a calculated risk. You use your money, your method, and your money management to enter and to manage your trade, and you have to repeat that. You have to practice that over and over. Right. So what is Japanese candles? I like to compare it to the tracks in the sand. In this case, it's the Kalahari sand. It's a big desert in South Africa, up in Southern Africa, and there's people that live there, the Bushmen. Now, not many of them are still living in the wild there. Most of them has been, moved to towns and so on, but there might still be some tribes there. But these guys lived in nature, very close to nature, and they are expert trackers. They can stand up in the morning and look at the sand like these guys, and they can tell you what type of antelope went past here, how fast they went. If one was injured, they would be able to see it in the tracks. Now, what the tracks in the sand is to the Bushmen. The candlesticks are to us. It's the tracks in the sand that tells us what the market is doing. It gives us a little bit of insight into what is going on. Each candle being a track. Right, so that's the value. In the beginning, and I'm going to jump over to my MetaTrader now. In the beginning, when we train, we don't look at individual candles. What we do is we need to see first the structure, that what technical analysis means, the initial stages of the next trend. To do that, we zoom back, right, so we can see the chart, and then we start identifying the structure. Here was a downtrend. If you don't know what I'm doing now, please listen again. Send me your email or email me, and then you can listen to the first one where I explain it better. You identify the structure in the market. This is 4 hours, a little bit higher time frame. the structure is more easy to see. And the lower time frames, there's more noise. The structure is still there, just a little bit more difficult to see. So we don't focus in the beginning on individual candles. We're looking for the structure in the market. Up trends, down trends, a bit of ranging. Here is the 4-hour in this stage. Beautiful. It's giving us a beautiful structure here. There's a bit of ranging here. And there's a downtrend again. So if you can't see this, guys, then you're blind. With this business, this is the skill where it starts. Technical analysis, identifying that rhythm in the market, underlying structure. So we do not look at candles yet. Right. The candles, when we can do this, we identify places where the market tells us the initial stages of the next trend. We identify those spots. That is our first and most important part of the foundation. Right. And then as you practice your method that you choose, your simple, well-defined method, combined with your money management, as you practice that, then it's going to make sense to start studying, to start getting to know what candles are. Right. So what are candles? Let's zoom in a little bit. Candles gives you insight into what is happening in the market. Like I said, the tracks in the sand. It reflects what people are doing. This is the 4-hour candles. So each candle represents 4 hours of activity in the market. Up, down. The price goes up, price goes down. And this is exactly the purpose of this webinar, to give you a little bit more insight into what these things mean. And if you know, like I said, it just enhances your ability to take good trades. But it cannot replace knowing and understanding that what fundamental of the technical analysis is all about. That structure that I showed you, it can never replace that. So by studying this, becoming an expert, it is not necessarily going to make you a better trader. So you must get that foundation right first. Right. So what does it mean? What does all of these things mean? Let's go. First, the history. This is by no means new. In the 18th century, it was discovered by, I wonder if it's not the 16th century there. Might be a mistake there. Google if you just double check for me there. Okay. Munisa Homa was a rice trader in Jakarta, and he discovered the importance of tracking the price. So obviously in those times on a computer, so they did it by hand. In the 1980s, Steve Nissen, who was living in Japan, discovered this, and he realized the value of it and brought it to the Western world. Right. The structure of a candle. What does it mean? Right. We've got an open. So what this represents is if there's a candle. In this case, I chose it's a bullish candle. It's a candle that opened, and then the price went up. It closed, meaning the price went up. It's a bullish candle. You can change this color later, or you can change this color on your MetaTrader. I've chosen white and then orange for my bearish candles, for the down candles. So the structure is as follows: the open, the close represents the body. And then you've got your high and your low. I'll show you how this forms. And just the opposite, when it's a bearish candle, a down candle, it means it opened there, it closed lower, and you've got your high and your low. So I'll show you how this forms just now. If you're a beginner, please be patient with yourself. As you repeat these things, then it's going to start making sense. So don't worry if it's still Greek to you. Okay. Right. A little bit more of the structure. This is what we call the body, or the real body. And this is what we call the upper wick, the upper shadow, and the lower wick, or the lower shadow. And this is called the range. Right. So what does it represent? How does it form? So what I've done here is just a small animation. Price opens, like I showed you, it goes up, goes down, goes all the way up, and then it closes there. So that's the price movement that's represented with this one candle. It opens there. It doesn't matter what happens inside here. It went down at some stage. It went up, and it closed there. So this is what is represented. Here we can see the price, because it opened and it went up. There was more buyers coming into the market, but the buyers tried to take it higher, and some sellers came in. It still opened higher than what it opened. It opened higher than closed higher. Sorry, than when it opened. So this is why we call it the bullish, or the buyer sentiment candle. All right. What does time frames mean? We've got on any chart, we've got the time or the price on the one axle and the time on the other axis. And what happens is a candle, let's say a 60-minute candle, represents the price in that 60 minutes. So after 60 minutes, it'll start opening a new candle. And again, after 60 minutes, a new candle. So what you're looking at, if you're looking at a 1 hour or 60 minutes, you're looking at what happened in the market in that period. And like I said, traction in the sun, it gives you an idea. Here we can obviously see the price went up. There was more buyers in the market. There was a little bit of indecision, more indecision, and then buyers took over again. So it's almost, somebody said, it's almost like reading the emotions of the market. So that's why when you go to the lower time frames, there's less people involved. If this was, for instance, a 5-minute candle, represented a 5-minute candle, there's not a lot of people trading within 5 minutes compared to the higher time frames. So there's a lot of more emotion, a lot of noise. So and if this is a 1 hour, if it's a 4 hour of a daily candle, then there's a lot more people involved there. So there's less emotion that is represented in the candle. Higher time frames, but lower time frames both got the advantages and disadvantages. The higher time frame is less emotion, less noise, but and more stability, but also less opportunities. With the lower time frames, there's more noise, but there's more opportunities. So, but the important thing is the structure is there. Underlying rhythm, the structure is there in every single time frame. Okay, types of candles. Bullish candle. This is an extreme bullish candle. You can see obviously it closed, it opened, and it closed at the top. So there was very, very little sellers or bears influence in this candle. Here it went up. Sellers tried to take it lower, but the buyers won the end of the day. So each candle representing price action and gives you an indication of what happened. Here you can see opened, buyers couldn't win, sellers took it lower, but in the end it was still a bullish candle, but not very convincingly, not as convincingly as these ones. Okay, again the same, and this is what we call a hammer, very special. A lot of guys call it a pin bar. Here you can clearly see the market opened. Sellers tried to take the price down. For some reason they couldn't, and the price closed much higher. This is it's a very indicative, handy candle, and you'll see it over and over in the markets. All right. So I'll show it to you a little bit later as well. Right, bearish candles exactly the opposite. So here it opened and closed lower. Little buyers involved in this candle, but more there, still bearish, and exactly the same. Here we call the shooting star. The buyers tried to take the price higher, couldn't, and sellers won the day. So this is a good indication that there might be some more selling coming in, or the sellers might win. More sellers than buyers anyway. Right. Please, guys, if you have any questions, post it here. So otherwise, I'm just going to continue. Okay. Our third category is indecision candles. This is where you can clearly see the buyers try to take it higher, the sellers tried to take it lower, and it ended at a place of indecision. Nobody really won there. So this is also an interesting type of candle. It can warn you sometimes to stay away, to wait with the decision, or it can just confirm what you're busy if you're in a trade or so on. Right. This is a nice one. It's called a spinner. Looks like a top it's spinning. Okay. So you see all basically, immediately you'll see in this case a spinner, it was a balance, a clear balance, very close to the middle. There was obviously, because it closed higher, gives a little bit of more of a bearish issue, but still is indecision. So there wasn't a clear winner in this candle, either buyers or sellers. Right, now we're going to look at a couple of setups that you find in the candles. And as you can see, it's going to be pretty now. It's going to be very easily spottable in the presentation. But this is how it looks in the charts. Candles are the same, and you see these formations. You see these formations there. I showed you the shooting star, so that the buyers tried to take it up there. They couldn't, and it was an uptrend. They couldn't. Sellers came in. The buyers tried again. There, it's what I call a golden spot. There's a price going uptrend, and there's no more people that's willing to buy there. And that's the market's way. These are the markets, I call it the golden spot, or the initial stages of a new trend, where the market tells you, listen, take a calculated risk there. There's a very good chance that, or the odds in your favor that the price is going down. You never ever try to predict the price, because if you try to predict the price, it's like, it's a very interesting process that happens. In your brain, the moment you decide, yes, this is going to happen, then your brain starts limiting the options. You literally start seeing less options. And this is the market's way of confirming to us. This is not us guessing what the price is going to do. We take a position here, we never know what the price is going to do. Just after it triggered our position, they could have just jumped up. We don't care. We take a calculated risk in these areas. And when we've applied our method, we're busy managing the trade. Then the nice thing about not predicting, but just listening to the market, is the emotions. Especially if you've trained well, practiced it a lot, your emotions is gone. It's just like any business transaction. You do your homework, you take the risk, and that's it. And you know, over a series of trades, you're going to make a net profit. That's a very, very important mindset to have. All right, so let's continue. We've got obviously candles going down here, and at some stage we get this huge price is going down, and now something is happening in the market, because the sellers couldn't take it lower, and the buyers came in here. Now it means the demand in that specific candle is greater than supply, and it's a bullish, it's a possible end of a downtrend. This is never ever, guys. This is not a method. You don't take a trade because of this. This is just like the tracks in the sand. It might be. So there's nothing. The market's just warning here. You start looking, but there's no entries here. You still have to wait. You have to see. You have to wait for that initial stage of the next trend, that golden spot. Never ever is a candle, a good method, to just enter into the market there. Now definitely it's gonna go up now. Never ever. It's just a hint. It's just a warning. It's just like the tracks in the sand. That Bushman, when they see those tracks, they interpret it, but it's not the antelope there. Then they have to go and look for the antelope. They have to wait. They have to be patient. So it's the same with our tracks in the sand here. All right. Okay, let's look at another one. The price is going down. Sellers, lots of sellers in the market, and we have a hammer, or a pin bar. So the sellers had difficulty taking it down. Buyers came in for some reason. Remember, the price cannot go down forever. That's part of the structure of this. What makes it interesting, the structure of the market. Always, it's like supply and demand is like gravity for physics. Supply and demand is like the gravity for for economics. Price cannot go higher forever. At some stage, there's going to be no more buyers. The price is too high. Nobody's willing to buy more. And then sellers come in. Price goes down. Price cannot go down forever. It's just logical. At some stage, the guys that's selling say, no, sorry, we're not selling anymore. It's just too low. And then buyers is gonna come in. Everybody loves a bargain. So that's the reasoning behind the structure or the rhythm in the market, which is represented by the charts, and that golden spot, the initial stages, is the area where the odds, the risk reward ratio is a lot in your favor. Okay, so this is a hammer, so it gives you an indication that it's a possible end of a downtrend. It's going to be the start possibly of a new uptrend. So it's not a golden spot yet. It's not an initial stage of a new trend yet, but it's possibly. So that's what's warning you. So you have to start paying more attention to this than to other charts, right? Okay, let's look at another one. We've got a very strong bearish candle here. A lot of sellers, and then all of a sudden, yeah, we've got buyers coming in, and especially because it closed above the halfway of the last strong bearish candle. So again, demand is greater than supply. It's bullish. We call this a piercing line candle, and it's a possible end. Always possible. Right, another one. Okay, this is called Harami. Down, up. As you can see, not very clear. So what's going to happen? We're not sure. It might be, it represents equilibrium or balance. So there might be a continuation, might be up. Again, it's just a warning. So like the track in the sand. It's neutral. It's not a definite, definite. It's not as powerful as the previous ones, right? It's just a possible warning, possible reversal. Okay, we've got another one. We call this one an engulfing pattern. What happened is the sellers couldn't take it lower here, and then they tried to take it lower, and there was a powerful upsurge of demand pressure, right? So demand is greater than supply. Again, possible end of a downtrend. Flag it. You can come and watch, but it's not the entry yet. It's not a method in its own. Okay, I get a lot of guys. There's some feedback. I get a lot of guys in the beginning think, yes, this is it. This is how they're going to do it, and then they start taking trades there. And if they are unlucky, they win a few. The reason why I say that is because if they win a few, they think, man, I've got this. This is very easy, and they start taking serious money in, and they very quickly lose it all. If they're lucky, they lose a bit, and then they realize, oh no, something's wrong. I have to study a bit more. I have to do my homework. This might not be the answer to getting rich quick. Unfortunately, that's one of our biggest issues. People think in this industry you can get rich quick, but it's a business like any business. You have to know what you're doing. You have to do your homework, right? Again, this is a little bit more of a powerful signal. We call this a morning star. There's 3 candles. Sellers tried to take it down. Buyers started coming in, not overwhelmingly, and then they started pushing up. Right, so now this is getting interesting. So still not an entry for us. I know a lot of guys that use this as an entry method. It's possible. For me, I like a little bit more confirmation. So, right. If anybody of you are interested, there is when you log onto myfx.com. Oh, no, it's not myfx. If you log onto your profile, myFXTM, you'll see the recorded webinars. Right now, on that, you see when you open up when you go onto your profile, you see education on the left-hand side, and then you get webinars there. Now it shows the webinars that's still coming. And then very, very handy, it gives you a lot of recorded webinars. So scroll through that. That's very, very handy. What's nice about it is you get to listen to people, different people. You're building your root system. You're getting knowledge. You're repeating. Very, very important. The beginning for beginners. And you can go at your own pace. So if you know what the guy is saying, you can just scroll forward or backward or whatever if you want to hear it again. So you'll see there near the top there's a moving average spring strategy. That's where that's just one simple, well-defined method with good money management. There's others there as well, but that's when I talk about my method. That's normally what I refer to as the moving average spring strategy. So if anybody, if you want to listen to there, what I've also got there, which is important, is the basic introduction about what is trading really, the foundation, just getting a lot of out of those issues out of way. It's also there. So I think if you just search for gift, it was a gift of online trading. I changed it to the foundation of online trading. It's more accurate, so you can get it there and you can listen it. It gives you a little bit of background. Root system, very, very important if you want fruit one day. Okay, so this is a little bit more of a concrete way of saying this might be where we want to take a trade, but again, this is you have to have a method, simple, well defined, that you practice with good money management. A lot of guys underestimate the power of the money management. You can have an excellent, you can have understanding about what technical analysis is, that golden spots. You can have an excellent, well-defined method, but if your money management is not right, it's still gonna have, it's still gonna be difficult to make up a net profit over a series of trades. That's what happened to me anyway. I was stuck for a while, for quite a while. All the other stuff was in place, but the money management I didn't understand. I needed some more information there. Right, let's go on. Okay, bearish reversals, exactly the opposite. We've got a up movement here, and all of a sudden a lot of sellers coming in. So it's possible. This candle is called a long dark body. Supply is greater than demand. It's a possible end of an uptrend. You will see why, especially when we just jump back to the structure or the rhythm of the market. You can see why the candles are so important at these turning points. The candles is not everywhere is not so important. I mean, in the middle of a trend, you're not going to start looking for entries there. Simple reason, the risk-reward ratio is not in your favor. At those initial stages of a new trend, that's where the risk-reward ratio is the best in your favor. Now, I cannot really emphasize it too much. Obviously, with every initial stage, you won't get a good entry. That's where your methods can help you. But it is the place where the odds are the most in your favor in the sense of the risk you're going to take. It's a small risk, and there's lots of potential reward. That's very, very important with any business. So, right. So let's see what happens here. We've got up candles, lots of buyers in the market. All of a sudden, seller starts coming in. Call that a shooting star, as I mentioned. Supply is greater than demand, and bearish. Possible end of an uptrend. So these candles, if you understand that structure that I just showed you, the rhythm, underlying structure, and the candles are very handy to identify. But you need a little more of them. You need a whole bunch, like or more of them to confirm. Right. That's why in the beginning I like to zoom out, so you can see the class. So you can see the zoomed out. You can see that structure a little bit better, so you don't get lost in the details. So you've got an overview. Right. Again, bearish reversals, a lot of buying, and all of a sudden you've got a lot of sellers coming in. And this is again the dark cloud cover, the opposite of the piercing line, and it closed below that one and starts giving an indication. It's like a warning sign. Bearish, possible end of uptrend. Okay, up we go. Some selling, not convincing. It's our army again, same name. So look, equilibrium, it's neutral, and it's just a warning. Not such a clear warning. Right, some more up movement and engulfing. When we've got here engulfing pattern, lots of sellers coming in, totally engulfs that small little candle there. Again, supply is greater than demand, bearish, possible end of an uptrend. Right, when we finished here, I want to give one of you a chance to say something. So if any of you want to say something or ask something, then I just want to make it a little bit interesting more for you guys. So just let me know here with the questions and the answers. If you are willing to to make your voice heard. Right, bearish. And this is what we call an evening star. So up bullish movement. Bears started coming in, and then all of a sudden, a lot of them, a lot of sellers, a lot of the selling pressure. So supply greater than demand, bearish, possible end of uptrend. Okay, now what I've done is I've only looked at a few of them. If you log on to my FXTM, and you go to the education, you'll see there's ebooks, and this is where our head of education, Andreas Talasinos, he made a very, very nice compilation of the most important ones for you. So a little bit more of the ones that I didn't do here. I haven't got time for everything, but very, very handy. He also shows you a couple of ways to possibly to make it a simple method you can utilize. He takes a few indicators like RSI and MACD, and then it just shows you how it's done. So you can use these patterns as part of a method. So, and this is the bearish one. Just download it and go and read it. There's actually another one, 50 Habits of Successful Traders, that he also did. A little bit more on the mental side. Very, very important, guys. Don't forget about the way you think. It's very, very important. A trader thinks a little bit different than other people, the way you interpret these charts. So the fact that we take a calculated risk, it's all the result of training yourself to think like a trader. It's just the same with any career. A doctor doesn't think like a carpenter, doesn't think like a lawyer. It's different skill sets that you apply. These are all humans, obviously. Foundation is the same, but we develop our skills in different directions for a different purpose. So the purpose, obviously, for traders being we've got an opportunity to apply our skill to provide liquidity to the markets. Right, that's the opportunity we have. We take a risk like any business, and the potential profit is why we do it. So, all right. Our website, beautiful like a library, online library, where you, especially for a beginner, I'm just going to jump over to our website here so I can show you. Missed it. There it is. So you go onto our website. You don't even have to have an account in the beginning, but so this is really open for all, just to show you guys, show the guys how serious we are about our education. I like in the beginning, especially the short Forex educational videos. Gives you very short summary of what everything is. What is a pip? These are all part of the root system, guys. Stuff that you have to get to know. That's why when people tell me, no, can I quickly teach them how to trade? They want to make a lot of money quickly. It's almost like telling a lawyer or a doctor, quickly teach me how to operate on people. No. You also don't go to a lawyer or a doctor that's just read a book and watched a couple of videos. So you need someone that has practiced, that actually developed his skill. So it's going to be same with you. It's almost like studying applied economics. So if you're serious about this, if you want it only for entertainment, yes, you can just jump in and out like you will. But that's not what our purpose is. Our purpose is to teach the guys how to treat this as a proper business. So you make a net profit over a series of trades. And like I showed you guys, it is possible. It is possible if you develop your skills and you've got a simple, well-defined method to take an entry, a calculated risk there. Sometimes can get stopped out, sometimes not, but over a series of trades, because you're working with a flow. There's an underlying structure. It is possible to actually make a net profit over a series of trades. In the beginning, unfortunately, people tend to be greedy. They want to make a lot of money very fast, no root system, and they focus on the fruit, and their trees just fall over. They don't do anything. They don't do it. So this is part of your root system. Get to know all these things. What is the terminology? Just like any career, what does this mean? What is a trading stop? What is this? So as you listen this very short, you're going to start learning. That root system is busy building. Right. See, I've actually got a Mangwa. Have a question. He said, I've been downloaded that, but it was difficult to understand. Thanks for the session. I've got a better understanding. Okay. I'm glad. So Mongo said he did download it, and it was a bit difficult to understand. Mongo, my advice is to just let it go a little bit and then read it again. The way our brains are designed, if you get new information, it's almost like a pathway, a neurological pathway that's being laid. So that's why it says repetition is the mother of learning. So every time you repeat something, there's pathways being laid in your brain, and as you focus, or as you concentrate, as you repeat, and it becomes like almost like they call it neurological trees, and it actually looks like neurological trees, like little trees, if they map your brain. So what happens in the beginning is there's no information. There's it's not a lot of pathways. But as you repeat it, you get it from different perspectives. And that little tree, that neurological tree, grows, and afterwards starts making sense, and you start getting insight. It's exactly the same process, the mastery process. You try, you learn, and you grow. If you don't try, nothing's ever going to happen. From learning to walk, talk, mastering any skill, bicycle, driving a car. Beginning with a bicycle, you don't know, your balance isn't right, your body hasn't learned yet. You put in training wheels, somebody's with you, and then as you train over and over, those trees, those lines come, and the tree starts getting thicker, and you can drive, and you take off the wheels, and then you can drive, you can ride a bike decently. And what happens then is you just keep on practicing. And you get guys that have a passion for it. They just keep on practicing. They end up making somersaults and everything. But they've put in the time. You can't shortcut your brain. You can't shortcut that process. If you've got a talent specifically, you can do it a little bit faster, but still you go through that training process. So, okay. Is there anybody that wants to say anything? So I actually want to use in my other sessions also. I think with our, what's this? With our presentation, we are almost done. Yeah, there's questions and answers. I'm just going to jump for you guys back to the first one, so you have my email. Please, guys, if you have any questions, email me. We use Skype because it keeps the cost very low to talk over Skype. You use data, so it's not a lot of money, and we can do screen sharing. So I train a lot of people over Skype. It's not possible for me to train you, make you an expert in one session. It's going to take time. You must make it your own. So, and I'm willing to help you with that. We've got the other trainers as well. So please contact us. Contact me. There's my email address. We've still got some time. So if anybody wants to say something, just raise your hand. I'll give you a time to talk if you want to. Actually, with the more applied sessions, I'm going to start experimenting with getting people to say they say and to give some insight. I've never ever had one seminar where I didn't learn something new. People are amazing creatures. There's a uniqueness in every person that as they grow, then you can say the same thing as somebody else, but it'll just come out a little bit different perspective because of your uniqueness. So every time I learn something new. In Rustenburg, where we were a couple of weeks ago, one gentleman there said that people don't respect the market. Yeah. And when he said it, there was just like a lot of other things for me jumped into perspective. And I realized, I know this is like a language, market speaking on the charts. And people try to tell the market, they don't respect the market. They try to tell the market what to do, and they get hurt because you don't tell the market what to do. They don't listen to the market. They want to tell the market what to do. But if you listen to the market, if you understand this this underlying structure is almost like a language. If you understand it, then you listen to the market. And this is the places where the market tell you to get involved, where the risk reward ratio is in your favor. And if you respect the market, listen to it, then this is a business that can do very well for you. I have a couple of mentors that I met, and one of them was he actually he it's the best time for him. Okay, I'll answer that now, Emmanuel. One of them, he was retiring and he realized with a shock he's not going to be able to make it. So even so late in your life, that person, gentleman, realized that he's got big problems. He's not going to make it with his retirement funding. And then he had time now because he's retired, so he started studying and practicing. Obviously, keeping his overheads low. He moved in with his son, and keeping his overheads very low. And he studied and practiced until this language went open for him. Until he started to see what the market is saying and listening to the market. And then he started building up slowly. Started building up his own account. And when, at the time when I met him, he was definitely not having any more financial problems. So even at that later stage, it's an excellent skill to get. And he also told me, just for interesting sake, that everybody is traders, long-term traders. If you want to retire one day, this is a skill that you need, even if it's just the basic language, because you want to retire. You're a long-term trader. You've got a whole economic life that you are building a portfolio, right? We've got Emmanuel asked a very good question here. He said, "What is the best time frame for a scalper or day trader?" Now, Emmanuel, this structure, this language, this underlying structure is in every single time frame. This is a 4 hour. Let's go and quickly look at a 5 minute. I'm just going to show the period separator so you can see what is the days, not. Even in this, the 5 minutes, there's a structure. You can see the structure here. Like I said, there's less people involved in creating these candles, so there's more noise. And especially with the lower time frames, you've got certain times when there's not a lot of people involved in the market. This is about the time that the London or the New York session closes. So there's the market's still open. There's a little trading going on, and then the Asian session starts. The Asian session is open, and then near about Frankfurt, and then London opens, and then there's lots of activity. You can see that. In the beginning, that's what I tell the guys to do. It's just open a chart and go and study this structure to see the structure. It's a little bit open to interpretation, so you need to practice. It's a bit more difficult on the lower time frame, but still the structure is there. So, and then you've got the London session, and then about in South Africa, about 3-4, the New York session opens. Also, again, a lot of people trading, and so in every single time frame, Emmanuel, there is a structure. So you choose the one that works best for you. Every instrument, be it pairs or commodities or indexes, has its own personality. So the structure is there, but some of them are just more spiky than others and so on. So you're going to choose, as you experiment with this, you're going to choose pairs that speaks to you, that makes sense to you. And there's no wrong or right pair or time frame. A person who has got a lot of time in the day can trade on the lower time frames, but he's going to have to train harder because of those more noise. People that's working can trade the 4 hours and the dailies. People that don't like it, they can even trade the weeklies and the monthlies. That's actually just your portfolio, your retirement portfolio. So it's longer term trading. So there's no good or bad time frame. Depends on your situation. Okay. Maureen asked for a copy of this. Unfortunately, I cannot give you a copy of the presentation. We're not allowed. But just send me your email, Maureen, and then I'll send you a link. And then you can watch this again, and you can take screen prints as you watch, so that you're allowed to do so. It's just a technical issue, I suppose. But anyway, that's it. Yes. Guama says, "Hi Theunis, I've tried to study the candles, but they're always not as straightforward as I explained in the webinars. I guess it will take some practice and crossing fingers. Never crossing fingers, never. But practice, yes. Let me show you again. As you practice this, I tell the guys in the beginning, the foundation, remember, is why do we look at the chart? Technical analysis. We want to identify the early stages of a next trend. So I tell the guys to spend time. No indicators, no distractions, just the structure of the market, that language, starting to understand the language. Easier on the higher time frames, as you can see, more difficult on the lower time frames. Let's go to a 30-minute. It's a little bit more difficult there, but still the language is there. As soon as you start understanding that, let me just get these trend lines out of the way. Right, so what do we see here? We've zoomed back a little. There's no direction there. There's no direction there. There's some direction there. It's a little bit more difficult with these ones, as you can see, but the structure is still there. So what have you got there now? There's a bit of a downtrend there. Right. So crossing fingers never. Studying this, looking for the beautiful ones. You'll see the structure there. Right. See here, difficult again, some movement here. And that's the one nice thing about, which I like about the structure. If you don't see anything, there is nothing. And you simply go to a place or a chart or a time frame that there is something. People try to look for something. If you have to search for something, then it's not there. If I look at this chart, there's no easy places to trade here. Remember in the beginning, we're training our eyes. You're training your eyes. You're building a skill. You're learning to understand the language. So nothing there, nothing there. What do you see there? There a long downtrend starts. Okay. Another important thing is, what is the definition of an uptrend and a downtrend? That's also important. 2 consecutive tops, 2 consecutive bottoms, 2 consecutive tops, uptrend, 2 consecutive bottoms, a downtrend. If you don't understand what I'm saying, what I mean with this, please send me your email or email me. Then I'll send you that first introduction to online trading. Very, very important. Right, let's see what happened there. Market went down, and there was a nice initial stage of a next trend. Right, there was a 1, 2, 3. There's a nice little uptrend there. There's a nice little downtrend. Guys, if your eyes start opening for these things, then it makes a big difference. That's the places where we look for entries. If it's not there, it's not there. So, but if you practice, you start seeing everywhere. I always tell the guys, go to the higher times in the beginning, to just train your eye. It's much easier to see there. So, and then as you get the feel of it, as you get the hang of it, then you go to the lower time frames as well, and you keep on practicing. It's like riding a bike. Anybody can do it. If you can talk, if you can walk, if you can drive a car, then this is just another skill you have to master. You keep on trying, you keep on learning, and you keep on growing. And a lot of people think about mistakes, especially the school system teaches us that mistakes are wrong. Yes, you get stupid mistakes, but in essence, a mistake is also you're trying something. And if you use that trying, even if it didn't work, and you learn from it and you grow, then you make that mistake valuable. Try, learn, grow. Okay. Maureen said that studying the structure means the market always repeats itself. It's also one of the things that I discussed, Maureen, in the introduction, and that is that there's 3 principles that makes technical analysis very powerful. So you'll see that there. The one is that price discounts everything. So if somebody buys something, it means he's done his research. We look at what people are doing here. We're not guessing. We're not wondering. We can see what they're doing, right? So we can see there was more buyers than sellers for whatever reason. So the second principle is the market moves in waves, always in waves. We use those waves to manage our risk. And the third one is that history repeats itself. Yes, people are creatures of habit. There's a reason why people started buying there. whatever reason we don't need to know, we can see, we can interpret that, and we can use that. And like I told you, this has been for centuries. These candles has been developed or has been in practice. It's not something new. It's based on businesses are based on human need, people buying and selling things because they need it. That's just what supply and demand is. So, and this is the basis of what this is, what this is on, or what the structure is based on anyway. Okay, now it looks like nobody wants to speak. Our time is almost up. So, Aaron said or asked, is it advisable to trade over the phone or a laptop? Aaron, yes, especially the younger guys. Yeah, they can do amazing things with phones. My suggestion as an older generation is because a laptop or a computer has a bigger screen, especially when you're beginning, it's easier to get the hang of it. But definitely as you get better, then you can use your phone. I know a lot of guys that they wait, especially for the London session. They take the entry in the London session and then they leave. They go places and everything. They take their phone with them and they manage the trade with the phone, via the phone, or the laptop, or a, they call those things a tab. But initially, my suggestion, it's just my suggestion, just my opinion, is to start practicing this with with a laptop or a bigger screen anyway. So on the seminars I've seen, especially with the workshops, after the seminars, people bring phones and tabs, and they struggle a little bit to draw the lines, to get the feeling of it. So, but it's just my suggestion. I know guys that started from their phones and they're still on their phones. So that's your personal choice. Okay. Right. I think we're done for today. So any questions? I'm just going to end up with my email here. Please send an email and we get your answers, questions, and we even can do some more training. So to get the basics right, so that when you train, you're actually sure that your basics are in place, your foundation is right. So it doesn't help you study and, and your basics is not right. Then you're just studying, something that's not going to work. So that happens, unfortunately, a lot with guys. They think they start and they think the method is the way. And if the method produces a few losing trades, they look for another method. And you can spend years in that trap. I call it the entertainment trap. So I don't want you guys trapped in that. I want you guys to see this for what it is. It's a business. Get the skill, practice, and then, yes, you take it from there. You start building it up. You start getting cash flow. Small account, build it up. Right. Okay. I hope you enjoyed today, and I definitely enjoyed it. So, and have a nice day. Goodbye. Signing off.